Good morning, everybody. This is Mark Lambert from the Datas Pendulum Trading Group. I'm just going to spend a couple moments this morning to kind of look over the structure of the S&P 500 and the ES futures, which are the futures that are for the S&P 500. Just to kind of gauge what I'm looking at and kind of see where things are going. And also let everybody know, too, we are doing a little seminar this Sunday, which I believe is the 17th. I gotta take a look. I don't even know what date it is. Today's the 14th of July, so this upcoming Sunday, this is Thursday, 14th of July. This upcoming Sunday, we are doing a small seminar in the afternoon on the Elliott wave and market structure and basic Fibonacci expansion and contraction. And we're going to get into that a little bit. And I just want to show kind of like what I'm looking at right now in the S&P 500. Still don't know how to get rid of this pop-up. It happens every time. Here we go now. Let me get the S&P 500 chart up right now. This is the long-term count that I've been looking at right now, which I believe we bottomed a long-term bottom back in March '09 of a long ABC expanded flat pattern that started back in 2000. And I believe this has been the first wave up right now. I do believe we have waves 1, wave 2, wave 3, wave 4. Right now we're presently in wave 5. There's a lot of evidence that we may have topped off right here at this wave where I have it put over as wave X. Blow this up a little bit right now. But the only reason why I don't want to say that this has been wave 5 is that we had a very clear 3 waves down, and this does look like a clear 3 waves up. But this right here would have been the orthodox top of wave 1 within side of this possible wave 5. As you can see, the fourth wave, if you want to call it that, would have severely overlapped into wave 1, which is something that we never like to see on the cash index. When that happens, that's usually telling us that something else is going on. So that's why I kind of look at this as a 3-wave move down, another 3-wave move up. We've done another 3-wave move down again. So when you're looking at all threes, I mean, this could either be a W, an X, a Y, and now we're in the fifth wave moving up, which is a strong possibility. And if that's the case, we do have waves 1, 2, and 3 registered at this point in time. So now this could be wave 4, and we need to drive to a new high to make wave 5. But putting that aside, though, you kind of still have to look at other alternates. I mean, this could be just a one giant triangle, too. Wave A, B, C, D, and then now we're going to come down to E, and then move back up to a new high. But I'm kind of taking a look at this right now as being more of a terminal move. Kind of hard right now. It's just over the last few weeks that the structure's been kind of like playing around with us a little bit. So when I drill down to the hourlies, you can see we have wave 1, wave 2. And then internally, as of I believe last Thursday or Friday, we had wave 1, wave 2, wave 3, wave 4, wave 5, either forming A, B, C, or 1, 2, 3. And you know what our thoughts are after we have 3 registered waves. We're always looking to tighten up our stops at that point in time because 3 waves is a given. It's going to happen every single time. You can't have direction, you can't have motion unless you're forming 3 waves. If you're only forming 2 waves, you're basically standing still. You're leaving one point, going out and snapping back to the return point. So to gauge some direction, we need 3 waves. So 3 waves is a given. That's why we consider that to be a very, very safe trade. And when you also look at the hourly structure right now, on what could possibly be wave 4 internally in this, we could have an ABC at this point in time. This could be wave 1 up, wave 2 down, and now we're moving up. I'm going to take a quick look right now at the ES to kind of show what I'm looking at. This first one right here is the hourly charts. I've taken that first wave up, I've measured it, and now I've put it down to this wave right here, which I believe may be wave 4. Right now, this Fibonacci projection has been invalidated. I don't want to say it's been invalidated, it just hasn't been validated yet. I want to see the market vibrating between these levels and moving up off of it for me to determine if this is the one that we should be looking at for a top. So far, this first inflection down from last Friday. As you can see, the market has been using it as kind of like support and resistance. It's reversed and has been bound between the 81, and you can see it's a reverse right off of the 81, supported yesterday off of the 127. And even with the sell-off with the market yesterday at the close, for one reason or another, when I saw that sell-off, I'm like, nah, it's just a trap. People are going to be going short, and the market's going to move up against them, which ended up happening. So you can see that the cash index right now could be forming an ABC also. I mean, this could be wave A down now, and this could be A, B, C. You just got to keep all those alternatives in the forefront, because if you don't, you're going to get trapped, and you're not going to know what to do. So, but either way, I'm going to kind of look at these projections right now that I have. This projection right here, as you can see moving across the screen, is basically just this first wave inside of the structure being measured, and then it's being projected down through the rest of the structure. I've mentioned before in the past, so basically all I did is measure from here to here and then superimpose it right here to the top of this wave. Basically, when you look at a Fibonacci expansion, I never go past a 423.6, and in most cases, the 423.6 will hold, and if it does get breached, it normally snaps back quickly enough so that it's almost like a safe turning point at that point in time. But either way, when we blew past the 423, if I had used the same expansion, I would have been like down here somewhere. You can see the market continues to go past it. One of the market harmonics that I found kind of works for me is that I actually set this up to a Fibonacci retracement tool. Is that I use the 100, 200, 300, 400, all the way up to 1200%. I've seen it go so far since I've been using this up to 800%. And it's funny, it's like it reverses right on the T in those cases. Yesterday's market sell-off came within, let's take a look here. 1302.25 was the low. 1302.50 would have been the actual harmonic, actually 48. So that's when you take a look at that, it came within a quarter of a point of catching the low yesterday. And from there, as you can see, the market has moved up. It's bounced back off of the 400. You can see moving right across here. Came back down, still formed a higher low at this point in time, and now has been moving back up. Came up, hit the 200, reversed, came back down, hit the 400 again, and now we're moving back up again. I do believe that this move that we are going to have today is probably going to be a little bit of topping action, because when I do look at the larger structure as far as the Elliott wave goes, we do have 3 waves down, and with 3 waves down, this being 1, 2, 3, the safe trade would be to get out at this low, which is good. But the fact that the market has failed to lift in a 5-wave sequence, and now this structure has came down, overlapped, and has dug deeper than this one, it's telling me that this move is not done yet. So I'm looking for the market to probably stay under this level, or at the very least in the cash index, probably stay under this level right here, which would bring us to, what's the low would be, 1333.71. Before it starts to reverse back down. So this could just be another ABC. I mean, it could be forming a 3-wave structure, which could be the beginning of a flat. This could, expand out to a triangle, a flat, a zigzag. I really don't know right now if the structure is not complete. With Elliott wave, you kind of need to see the structure almost complete for you to be alert that the market's going to turn in the other direction. So I hope everybody finds this useful, and God bless and good trading to everybody today. And maybe we'll see you guys this Sunday at the seminar that we're going to put on. God bless and have a good day.